Before we begin, a disclaimer: this podcast is for informational and entertainment purposes only and should not be relied upon as the basis for any investment decision. Nothing you hear is an offer or solicitation to buy or sell any security. The securities discussed on this podcast may be owned by persons being interviewed. Before making any investment decision, please consult an investment advisor. We're changing the format of the Never Sell podcast. So up until this point, what we've done is we've discussed one company per episode. And what we're going to do going forward is instead cover a wider range of topics. So for those of you who listen to Ben Thompson's Sharp Tech, I think it's going to sound very similar to that. So over the course of a month, MBI and I will just kind of gather various topics that come to mind. We'll put them in a Google Doc, and then we're just going to talk about them at the end of the month. And at the same time, I think we're also going to have a recurring mailbag. So if you ever have questions, any questions at all, it doesn't have to be about stocks. You can email either me or MBI, and we'll dip into the mailbag to answer the questions that either of us has a good answer to. So I think MBI and I we discussed this, and I think newsletter writing can be very much a one-way street, and we thought this format would introduce a bit more of an interactive element. I get emails quite often from people who want to have one-on-one calls, and unfortunately, I don't have the capacity to do all of those. But hosting a podcast where I answer inbound questions, I think is a scalable way to cover any topics that come to mind. And so today, we're doing the AMA. We got a lot of questions. We're definitely not going to be able to cover them all, but the ones we don't cover, we'll let those sit in the mailbag, and we'll answer them in future episodes if we have good answers to them.
Yeah, sounds good. And I think I agree with the point that you made. Sometimes I would receive emails, and at times I have noticed that there is almost similar flavor of like an email that's almost a recurring theme. And I wish I had an opportunity to kind of talk about those particular theme in a podcast format where it can reach to a lot more people. Probably many people have questions. Obviously, not everyone takes the time to actually email a question, right? So if 2 or 3 people are asking the same questions, probably the case that there are a lot more than 3 people out there who also have similar questions. And yeah, we can definitely address that through our podcast.
Yeah, sounds good. Should I ask? I can ask the first question then.
Sure.
To you. Okay, so this question is from Ivan. Curious how your process is evolving with AI and how you guys are using it or not. Thanks.
Right. So obviously that's a big theme. And so I think since I have been using AI profusely over I would say last 9 months or so, I have been able to read a lot more, consume a lot more content, and it's it's a cliche to say, but it does feel like when I just look at myself, I feel like I'm almost a living representation of Jevons paradox, because it's easier to read because I can summarize anything, right? I do have the capacity to now actually, even before reading something, I would just, let's say, click the button on Chrome, create a summary through Gemini, and try to get a sense whether it's interesting for me to kind of dive deeper, right? And if I didn't have that, for example, I would probably scroll it. Oh, it's too big or whatever, or it's kind of too out of my zone. I don't have time to read it, right? So then I would just skip it. But now there is literally hardly any essays or articles or pieces out there that I would be intimidated by at this point. It can be very challenging for me. I can just always throw it to the AI and simplify it and ask questions and have this kind of conversation. So my bandwidth has drastically expanded through that. And what is happening is basically I'm actually reading more stuff. Like a lot of, I think there is a question I have noticed that someone asked, what do you think about, how AI will impact your own businesses, newsletter business, right? So obviously that's also something I think about. And one thing that I have really, again, observed in myself, like I I subscribe to a lot of Substacks, a lot of independent research, services and like, other content. And I ask myself that question, how many, subscriptions did I unsubscribe after becoming a prolific user of AI? The answer is zero. I
Mm,
have not unsubscribed from anything. And that the next question is, did I subscribe to more? The answer is yes, I did. I did, like, I wouldn't say it's because of AI, but it's like, again, like I said, I have more bandwidth now. That's been obviously this can change. This can change, but that's been my experience so far.
I I have the same exact experience. I mean, the Javon's paradox certainly applies to me as well. I find that AI really hasn't saved me any time at all. If anything, I'm spending more time on my write-ups than I ever have, and that's because I'm using it to, try to level up my game here. And so
Yeah.
I feel like, when you're researching a company, it's not like there's some fixed quantum of questions and you check the box before moving on. I think if that were the case, then using AI would be a time saver, no doubt. But
Yeah.
instead, like, the research process, it should be more of like a dynamic activity where you learn something along the way that opens new avenues for exploration, that prompts even more questions. And, I think prior to AI, there was just less material I could get to within a
Mm.
3 week span of time. And less material means, there are fewer nuggets that lead you down some interesting adjacent pathway, and frankly, just not enough time to give an in-depth treatment of certain interesting nuggets that you do come across. One other thing, I
Sure.
guess that comes to mind here on that question, I I think, AI can definitely be a double-edged sword, right? And where it can definitely make you smarter if you use it in a deliberate and very engaged way. It can also make you, dumber if you just simply treat it as a one and done answer machine. And like the act of thinking, it literally changes your brain, and it's not something you would
Yeah.
necessarily want to outsource to the robots. And it's just, it can be very easy to trick yourself into thinking you understand something nearly to the
Mm.
extent that you do. It's that classic illusion of knowledge. It's like seeing a
Knowledge.
hard problem, looking at the answer in the back of the textbook, and then saying, "Oh, it's super obvious." Well, it's only obvious looking back, right? You haven't internalized it um, as much as you may think. And so, if I were to guess, like in 5 or 10 years, the critical thinking ability of the median person is going to be lower than it is today. But for a minority of highly motivated, high agency people, AI will just like make them a lot smarter, I think. And so I think you want to be using AI to take your work to a higher level, not necessarily like save yourself time. And I think
Mm.
maybe a general rule of thumb is like if you find yourself saving time because of AI on creative projects, then you might be using it as a shortcut to thinking. And I'm not talking about the mind-numbing work, but
Mm.
I'm talking
Mm.
about more of the creative stuff that requires you to exercise your brain. You know,
I think I would also like to add here. Uh, I do think AI will make me smarter in a lot of areas, but I also suspect that it will make dumber me in some areas for sure, right?
yeah,
So it's not just, either or for even one individual person. It can happen that sort of like different shades of, impact even within a person, right? So like as you mentioned, like, when you let's say we are covering something very technical, like studying something very technical in nature. Maybe 5 years ago, either we would be intimidated by that, or maybe in 3 weeks we can't really do all this like foundational work and then kind of get to the industry level work and then like company level work. Now, as I was alluding before, like it's there's almost no company that would intimidate me to undertake a new project, and yes, there is certainly a risk that because it's a very conversational in nature and because AI is always dumbing it down to kind of my, knowledge level, it can instill a sense of understanding which isn't there yet, right?
yeah,
Uh, and I mean, I don't think I can quite eliminate it. It's very hard. It's a human, experience. Everyone will kind of suffer through it. Uh, at least for people like you and me who are, let's say, in the investing world, I would imagine the world, the market will give us, a lot of feedback, and we'll realize, oh, I didn't realize that. I didn't
Yeah.
realize that this is something that can happen, and over time we'll probably grow a better, a more measured approach, and which will probably keep us a bit more grounded, let's say than the kind of people who don't really get the feedback from real world. I don't think I'm completely immune from it. I think everyone is somewhat susceptible to that shortcut, as you put it, right? But you're absolutely right. Like, being able to think actively is part of the exercise if you want to gain, more in-depth understanding of the topic at hand.
No, I think it's great as you were alluding to. I think it's great as a research sidekick for especially like
Hmm.
technical topics. You're researching, let's say, cadence and synopsis,
Oh yeah.
and you want like a detailed summary of like the place and route step and ship design, right? I mean, it's great for stuff like that. And I think it can also be really good at like providing light edits or cleanup for a paragraph that you've already written. Um, although like I don't although like I find like the paragraphs it produces on its own to sound a bit off or stilted. Like there have been times like when I've been reading something and then just for kicks I'll copy and paste like a large section of that article and I'll put it into Chat GPT and I'll say like, rewrite this in the style of some famous author like George Packer or Chris Hitchens or
Hmm.
Dave Foster Wallace or
Hmm.
Tom Wolfe or whatever. And like it always returns like some atrocious caricature every time. So it doesn't seem to have like quite mastered like the tone yet. I also like avoid like the big questions. Like I won't ask deep research to write a first draft of the report or whatever and then edit what it produces. I think that's just a non-starter. I think like you want to definitely do like the heavy lift yourself and then so like you want to form the skeleton of the report I think on your own and then
Hmm.
use AI as like a research aid to like flesh out some of the parts I think so like yeah I mean in fact I'd probably go as far as to say like deep research is maybe something that could be better used at the end rather than at the beginning right to see if you've
Hmm.
covered your bases
Yep.
but yeah, but because I just think like if you use it at the start, you rely too heavily on it. I guess the issue there is like you don't know enough about the topic to validate some of the claims it's digging up, and so yeah, that's just a final remark I want to make on that.
Okay. So yeah, moving on to the next question. This is from Craig. And so he asked, how do you and David approach avoiding cutting off right tail positive outcomes in thematic narratives while still maintaining an approach that targets bottoms up, high probability of earnings growth slash sustainability that leads to acceptable return? The market seems to be very much theme dependent right now, such as AI, GLP-1s, electric grid upgrades, momentum, quality, etc. He also wrote a bunch of things, but that's kind of the gist of the question. Uh, do you have any thoughts?
Well, I guess let me slip into boomer mode here for a
Okay.
minute, because because this has just been something on my mind and it touches on this question. So I
Sure.
think if you're on Twitter and you see what everyone else is talking about, it's natural to want to be part of that conversation, right?
Hmm.
Like right now, it's just all AI all the time. Honestly, it seems to be the only thing investors want to talk about, and I sometimes feel like when
We're doing
you're
the same.
we're doing the same. Look at us, right? So, so it does kind of feel that like when yeah, like when your environment is covered floor to ceiling by a certain topic, in this case AI, it can seem like there's no other place to exist. Like your entire investment world is maybe confined to big tech and AI, and you need to
Hmm.
have like a strong view on how things are going to evolve. And none of that is to say, by the way, that AI isn't tremendously important and blah blah blah. But all I'm saying is that doesn't mean that your investment attention doesn't need to be like squarely focused on the bullseye of that issue. Like, the big topics that are being discussed right now in AI, like will Meta and Microsoft realize excess returns on all this
Hmm.
capex? What is the impact of vibe coding on enterprise software company? What's the disintermediating effect of agents on consumer apps? All these questions, like very interesting stuff to talk about from a business standpoint. And these are all companies you want to understand at a very high level, given their importance to the overall economy. But you also want to be able to make a distinction between like, well, what makes for an interesting business conversation and what makes for an interesting investment idea because sometimes those are just two different things.
Yep. Yep.
And it's just, when you think about like all the uncertainties related to um, AI and um, what's clear is like these are not 1 foot hurdles. Right? These questions are not 1 foot hurdles.
Not at this
And
price. Yeah.
it's easy to trick yourself into believing that just because you've spent a ton of time
Yeah.
thinking about something that you therefore have more knowledge about the way things will unfold in the future. And sometimes there's just this like irreducible amount of uncertainty with when it comes to certain topics or certain questions that's a lot higher than it is for others, and no amount of reflection will like ever change that fact. And yeah, and so yeah, I mean, like the concept of audience capture, it's well known in media, and that's when you start writing about things that get clicks rather than things that you're intrinsically interested in. And I think maybe like a similar phenomenon happens in investing to some degree, where like people unwittingly limit their investment options to the thing that everyone is pontificating on like
Mm-hmm.
Substack and Twitter. And I think about this a lot because like I have this dual role as a newsletter writer and an
I know.
investor. And
Yeah.
from like a newsletter perspective, it's clear like what people want to read about, and
Right.
but and if I write about like some sleepy industrial, like nobody's reading that, forget it.
Mm-hmm. Mm-hmm.
um but from an investment standpoint, maybe that sleepy industrial is the better risk adjusted return.
So you touched on like about the thematic narratives and all that, but I think one part of the question was how do we approach avoiding cutting off right tail positive outcomes? Uh, yeah, I mean and I think there was also a question about self-discipline, and it's super hard. It's
Yeah,
sometimes like I always think about any of this like sort of big tech companies that's out there. If even if like 5 years ago, which is not that long ago, like 2020, 2021, let's say around that time, uh if you saw what these businesses did in the next like 4, 5 years, you'd be surprised. You'd be surprised about their growth persistence, right? So, uh, yes, like I do know, like for example, as you were touching on, like how these narratives, AI, and like what people are constantly talking about. Uh, I mean, as it is with most things, I do think there's a tension here. Like for example, you have at one hand what you are pointing out is has merit, but on the other hand, I also want to be cognizant of the possibility of this instinctive sort of like reaction, like, oh, you all want to talk about AI? I'm not
yeah,
going to talk about AI, right? I'm going to talk about something else, right? Uh, and at least for AI, I would say the ripple effect can be very wide, right?
yeah,
So even if you seemingly are talking about non-AI stuff today, I'm not sure that, those sleepy little things will be completely immune from like 5, 10 years from now, right? And so yeah, it's super hard like when it comes to talk, like who knows where narratives can take us. Like in the very short term, obviously multiples multiples are based on sentiments, right? And people have this tendency to kind of extrapolate recent growth trends in both directions, right? So it's we have been seeing this, I think, in multiple companies. So it's very hard to have very clear cut answer. It's very context dependent. But at the same time, I would say some of these companies, especially the dominant companies in AI today, the big tech, it has constantly, at least me, I've been following these companies very closely for pretty much my entire time in the US, that since I came to the US in 2017, and I would say they have consistently surprised me to the upside, right? So I want to be cognizant of it, but also there's definitely a risk, and we are now talking about capex levels to an extent that again that would also shock me. Like I keep thinking about Pat Dorsey's podcast on Invest Like the Best, and he was kind of you know almost befuddled. Like, how is Meta investing $18 billion in capex? this is a capital light business. Like, you can just, extrapolate your current business model to all the geographies and regions and make money like that. Like, where are you spending $18 billion? I think this was back in like 20, I don't know, 19 or something. Today, Meta is now going to invest $100 billion next year, right? CapEx. So the surprise happened in both directions. Now these companies are like constantly in this treadmill of investing higher and higher amount. Like when I update my model, if you put like $100 billion in CapEx, and let's say growing at 5-10% rate in the going forward, Meta's math doesn't work. It's going to be
Mm-hmm.
very hard to generate acceptable return if you keep assuming that $100 billion is the new normal, the baseline for CapEx, right? It's going to be super hard for you to generate, let's say, low double digit or mid-teen or high teen type of return. So yeah, so we're definitely grappling with those questions today. I do want to mention something about this narrative theme. I
Mm-hmm.
mean, I'll mention something, a particular company, Adobe, right? Uh, I think back in 2023, Adobe was supposed to be uh, AI beneficiary, right? I think I sold Adobe in mid 2023, and when I was explaining my sell decision, I specifically mentioned this that today a market is assigning Adobe as AI beneficiary, but Adobe's actual value will be driven not by what you label them today, but also by actually their ability to generate free cash flow over the long term, right? So today Adobe is AI loser, right? Again, I don't want to claim that it's over for Adobe. My point is these narratives can really violently shift without giving you much time to react. If you are
Yeah.
attached to a particular narrative and investing, based too much on that, I think you will be caught off guard, like more often than you realize.
Yeah, and I think the narrative, even on something like CapEx, has shifted pretty violently over the last
Right?
year. I think
Yeah.
people were a lot more skeptical about these huge CapEx increases a year ago than they were today. Today, it's kind of part of the bull case. It's when you see what happened. And no,
Yeah.
I mean, look, I think with like if you were just to rewind 15 years ago, not even that. I mean, it felt like these big tech companies, each of them dominated their own ponds. Meta with
Yep.
social media, Microsoft
Hmm.
productivity software, Amazon e-commerce, Google with search. And some of them, began competing more head to head with like cloud computing. But, AI it's so horizontal and it touches everything. And now the barriers separating them have just completely fallen away. And all these CEOs, they've read Clayton Christensen. They're definitely attuned to the risk of disruption in a way that I think the boomer tech companies of yesteryear were not. And
Yeah.
so,
Yeah.
it's like for big tech, the way I see it is like investing in AI, it's like a matter of survival where like if they don't do it, they'll face extinction down the line. And so it feels like they almost have no choice to invest because AI is just going to shape their core products and competitors are all
Yeah.
forcing like a race dynamic. And so the question is not whether to invest, but whether the magnitude of CapEx is going to earn an acceptable return. I hear, people are making so many comparisons to large bubbly infrastructure investments in the past. I've heard
Hmm.
railroads being mentioned time and again. And I think, railroads are like physical
Yep.
infrastructure with local
Yep.
monopolies, right? So the
Mm.
returns are constrained to the movement of
Yes.
physical goods. And there's just a longer lag time between when you lay down track
Right.
and when the returns are realized. Whereas here,
Hmm.
like theoretically, there's faster feedback loops because AI, just by virtue of the fact we're dealing with bits, it's not geographically constrained, and it has
Yep.
a lot more use cases, as you were saying. It's practically infinite. AI is
Yeah.
like water; it flows into every little crevice of the
Yeah.
economy.
Everything is computer.
Yeah, because everything is computer. Because at the end of the day, we're talking about general intelligence, and there
Yep.
is no aspect of the economy where intelligence isn't relevant.
Hmm.
Better planning, generation of more goods, faster and better chip design, better medicines, faster drug discovery. It touches like everything, and so at least for the moment, I mean, it seems like it doesn't seem like to me like anyone is investing far ahead of demand. Instead, everyone's just struggling to meet current demand. And so I guess
That's
I
what they're
don't
saying.
see, yeah, that's what they keep saying, right? And
Yeah.
so I don't really see signs that anyone's being reckless or taking the attitude of like build it and they will come. Um, and Now, on the one hand, so long as we're struggling to meet demand, then growth should be somewhat predictable, right? Because it's going to be constrained by, chips and algorithms. Um,
Yeah.
on the other hand, you can argue at a certain point, it is demand and not supply that will run into bottlenecks. I mean, I guess like one example I wrote about in my biotechny piece and touched on Charles River a bit is that, there's a huge number of AI companies that are focused on early stage drug discovery now,
Mm-hmm.
right?
Mm-hmm.
And 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 the applications here seem like very, very compelling. But even if if your hit rate goes up by an order of magnitude in early discovery, there's still going to be some doubt on safety and efficacy because we don't know how to model all the biological interactions in the human body. And so,
Mm-hmm.
at least until we crack that code, we still need to go through safety trials, clinical trials. There's still a big regulatory apparatus that needs to approve these therapies. Um, so I bring up that point just because, that could be a case where massive productivity gains in one part of an ecosystem could be bottlenecked by another that doesn't get resolved till later on. And in conjunction, like maybe algorithms like improve at such a rapid and recursive fashion that we actually see like a huge surge in the supply and oversupply. Is it possible to have an oversupply of intelligence? I mean, it sounds silly
Yeah.
to say that, but what I mean there is like we have an overabundance in the sense that we've got like the right amount of intelligence to discover like 100 times as many drug candidates as we have today, but
Mm-hmm.
not enough intelligence to unclog the bottlenecks like downstream from that, I guess is what I'm saying.
Yeah.
Now, on the other hand, like maybe like our models are so smart that they unclog those bottlenecks. And even if all the bottlenecks are still there, like the hit rate on drug therapies is still going to go much higher. And so Danaher's talked about that as a tailwind or whatever. And then maybe we see an explosion of new drug therapies that extends the human lives by 10 years, creating more demand for goods and services that AI
Right.
powers. You know what I mean? It's really hard. I guess
Yeah.
what I'm saying is because of like the nature of like recursive improvement and all this, the boundaries of productivity are just harder to delineate here than they would be from like laying
Mm.
down railroad tracks on the ground. Anyway, I'm rambling here, but yeah.
Okay. Okay. Let's move on to some non-AI stuff. Oh, go ahead. Pick the next question.
Okay, yeah. Okay, it's my turn. Okay, let me see here. Um, oh, this is from Salic, I think
Mm-hmm.
I'm saying
Mm-hmm.
that right. Um, Love
Maybe.
the way both of you write. Any recommendations and advice for someone who struggles with writing?
I did mention this to David the other day in our group chat. Uh, I do think so. Uh, writing block was a thing that everyone can relate to. Anyone who writes, they can relate to that. Uh, I do suspect, for better or worse, I don't know. I do suspect my kids, the next generations, they may not be familiar with that concept. They may not understand what that is. Like, what is
Mhm.
writer's block, right? Because anytime you are, suffering from that, you can just probably jot a few like phrases and give it to AI, and AI will give you like a starting point, right? So yeah, like I think that's probably still a decent suggestion, because I feel like it feels irrational how hard it is to start like writing sometimes. And I think it's perfectly fine, in my opinion, to use AI to kind of just help you get started something. And then you can probably the flow comes in. You can even change it. The first few sentences or first sentence that AI gave it to you, you can edit it later, but you just need to get it started, right? So
Yeah.
if you really struggle, I would encourage that thing, that approach. But as we kind of keep talking about, writing is thinking, right? So if you probably don't want to outsource thinking completely to AI, you want to sit on ideas, think through, and then kind of like I said, like I used to feel this like it feels irrational sometimes how hard it is to, start writing. I obviously know I have some idea, like, I have some sketch in my head, and let's say I'm, sitting in front of my computer, and it just wouldn't come out sometimes, and it was very frustrating experience. And I'm pretty sure anyone who has written any number of things can relate. So yeah, that's my kind of a brief suggestion.
And I would say, like I find it helpful to just break it down in chunks, um, and I think once you're narrowed in on a particular section, don't think too hard about how to write the section. I think, just write it the way you'd say it, right? So
Mm-hmm.
I sometimes find it helpful to imagine somebody asking me questions related to the section I'm working on, and then I just
Mm.
would write it the way I would speak it,
Respond. Mm.
and you can always tweak it later. But for now, you just want to get something on the page. You want to
Yeah.
establish some momentum, right? And so, um, and yeah, I guess another piece of advice here would be I think when you're in the groove and the words are really coming easily, um,
Don't stop.
don't stop. Don't stop. Exactly. Those are very precious and scarce opportunities that can be
Right.
hard to reclaim. And so you don't want to artificially
Yeah.
stop that flow. And the other thing I've heard, I can't remember who said this, but they were saying that it can be helpful before you sign off for the day, after you're done writing, have a few sentences for the next thing you're going to uh, write about, like the next day, and that can kind of help you get back into it. So I've done that, and I find that to be helpful as well.
Yeah, agreed, agreed. Okay, next, move on to the next one. So, this is also going to be a non-AI question. So, do you think the increase in pod style trading and their larger AUMs has affected how stocks are priced in the short and long term, and are they creating more opportunities for longer term focused investors? I actually don't know who asked this question. I didn't have a note, but yeah, this is one of the questions. Do you have any thoughts?
I don't. Well, I may in the future. I just haven't had time to really think about it, but I'll pass it over to you.
Yeah, I mean, it makes intuitive sense to me that it it should have some impact. If you just think from common sense perspective, and based on what we have experienced, let's say in the last, you know, 5 years since like COVID till now, it does feel like things tend to go to extreme in both directions, right? And people, at least people on Twitter keep talking about like, oh, this company missed earnings. There is no floor. Like what? You know,
Yeah.
like the stock can go up before the top line accelerates again. Stuff like that. Like we hear it all the time. It may We are maybe reaching a point where it may make sense to bet against that, because so many people are just betting on that. And like, if your
Hmm.
capital has duration, it may actually start making more sense to look for ideas that will not have accelerating top line, let's say in the next, let's say couple quarters or even longer, right? It may take like maybe a year for those people to come back and realize, oh, now the comps are easy. Now
Yeah.
this, top line's going to accelerate from here. Let's build it up, right? Uh, I didn't work for a pod. I don't want to be presumptuous here and make comments on how they kind of trade stocks. But again, based on Twitter vibe that I'm going with here, it feels like it's almost like a very very conventional wisdom these days.
Hmm.
That's how people are kind of chasing or not chasing stocks. And I mean, again, even if even if we kind of disregard pod and stuff like that or retail investing, uh, I guess it makes sense that like I was saying before, short-term multiples are completely based on sentiment, right?
Right.
There is really no floor when it comes to in the near term, right? That's why Meta came down to like a $90, right?
Hmm.
Uh,
Hmm.
people weren't People couldn't imagine what could happen to kind of turn this around, right?
Yeah.
So, you know, uh, like I said, makes intuitive sense to me that people with, with decent duration of capital, who are not bounded by this quarterly or even annual return, uh, or like outperformance or underperformance of the benchmark, they should have some advantage if they know what they're doing, right? Uh, But that's more like an academic question. I don't want to make a big claim here that, you will have like, people who work on these spot shops. They are pretty smart. They're not dumb people. I can tell
Yeah,
you that,
yeah.
right?
No, just
So
they're just playing a different game,
very
a
different
much
game,
different game. And
right?
I do sense the conversation around various stocks has
Hmm.
shifted to a lot more concern regarding like short-term data points and
Sure.
accelerating top lines and comps and that kind of stuff.
Hmm.
Um, and you hear it on earnings calls too, right? Like
Yeah.
it feels like um yeah, the questions that a pod would be interested in, those are the ones you hear a lot more of now.
Maybe a more interesting question would be, do we think this pod style investing is starting to affect the way companies are run?
Yeah.
They don't, in many cases, they don't have long-term,
Yeah, I mean,
timeline,
it's
right?
in my opinion, it's got to. It's got to.
It's got to, yeah.
Because, they're I mean, just look at because a lot of times these metrics that these companies use, they're not even necessarily, tied to value creation, like adjusted
Yeah.
EBITDA, adding back all the stock
Rule
comp.
of
What is that?
40? What's that?
Non-GAAP rule of 40. So these are just, you know, um, things that you see companies maximize, like
Yeah.
trying to optimize towards, and because it's become like this for whatever reason this football that everyone can kind of kick around. It's like regardless of how valid it is as a metric of value creation, it's at least loosely related to it, and
Yeah.
um and and um pod shops can kind of use it to trade the stock. And I also like we see these huge companies now
Oh
with
my
like
God, I know.
40% market cap swings. Is this justified in the sense that like, look, we're dealing with this huge AI thing and maybe the market is being efficient by doing that? Or is this like just, you know, pod shops treating these stocks as like trading sardines? I don't
Yeah, I
know.
mean, Nvidia is like what? 4, 5 trillion, I guess, at this point. I don't know exactly. I'm not keeping up with but I know Nvidia stock has doubled from the lows of April, right? And it's
Yeah.
like largest market cap company. So like we're talking about $2, $3 trillion of value change over the course of like not even 6 months, right? 3, 4 months. Uh, I mean, as you were kind of alluding to, I do think it can be a sign of the fact that market is kind of saying we don't quite know, right? So for example, Meta, I know the numbers is the top of my head, like, they roughly speaking generated like $30 billion incremental revenue in 2021, 2024, and 2025, and this year, right? And the constant estimates is like actually below 30 billion next year. Now, if you think about it, they kept raising capex throughout this period, and you're still adding 30 billion incremental like revenue. Why is it not going up, right? So,
Yeah.
and so if you think that's going to kind of be true, like 30 billion, $35 billion going forward incremental revenue for Meta, but you are raising like capex at a much like faster pace, the math actually doesn't work. Like you can't get good returns. True for other big techs, except Nvidia. Nvidia is a different business, obviously. Then you look at Nvidia's estimates, and that's what you assume. That's what people seem to be assuming. If you look at their multiple, if you look at their estimates, like okay, I feel like one of them has to be true. They both probably cannot be true. If you think Meta will keep investing, like I mean, I'm saying they can be true, then investors in Meta, Amazon, and Microsoft will probably not make acceptable return, and the Nvidia investors will make acceptable return if they're right. So that's a tension I see in the market. I would like to mention here, I haven't done a very deep work on NVIDIA. So I'm kind of going with the vibe here. Obviously,
Mhm.
looking at the consensus estimates and kind of commenting is not something that I would take too seriously if you're, let's say, if you have done a deep work on chips on NVIDIA. But that's the kind of tension on a superficial level that I feel.
Yeah. Yeah. Well, I think that's a good tie into this
Yeah.
question from Ben, I think,
Okay.
actually. Okay, love the podcast. Wanted to ask a little bit about Meta. CapEx and
Oh.
expected return on invested capital, especially compared to Reality Labs. MBI has written a lot about
Hmm.
how Reality Labs spend was a drag on the stock for a long time, but probably a big contributor to why it traded at 7 to 8 times earnings a few years back. Wondering why this time around the AI spend is different, and if you had to mathematically pin down what expectations are, what do you think the return on expected on this capital is? Tough question.
I think we can probably just, uh, I don't have to respond because I think we're kind of dancing around this question a few times, in this conversation, and we're talking about how challenging it is. Like I just kind of I sort of responded to this question before even you asked this question. Like two of those things can be true. Like if you assume, let's say in 2030, Meta's uh, capex is like, let's say, I don't know, $150 billion, right? Then the top line estimates that you see on a consensus level for Meta, it has to be a lot higher than it is today, like in
Yeah.
5 years from now. I guess a lot of people, push back in saying Zuckerberg is not going to stop. Even if he's not getting acceptable return, he's going to keep investing for like super intelligence and all that stuff, right? So, and I almost feel like I have seen this movie before. People used to say, "Oh, he doesn't care. He's not going to. He's just going to keep plowing his money to metaverse and whatever, right?" Uh, and I think we kind of know the answer. He has to care about stock price. He cannot just go
Yeah.
on his own thinking, "Oh, we'll just build this December." Like he's paying $1 billion offer to these AI researchers. You think he's paying cash? No, a lot
Right.
of it is in stock, right? So if the stock goes by 50%, well, those guys are not getting paid $1 billion, right? They're getting paid half of that, or even a lot less if the stock keeps going. So I do think he needs to care, and it doesn't make sense why if more capital is not solving problem. Why would you just keep plowing it? Zuckerberg is not dumb. I think at this point we should just acknowledge that. He's not going to just keep doubling down if there's no acceptable or there's no path to sort of like monetization or path to get an acceptable return.
Um, the reason why this question is so hard to answer, and it's almost a fool's errand to try to be too precise with it, is because it's hard to know. Yeah, it's hard to know just like where that numerator goes. I mean, I personally, and these are just kind of vibes for me, but I just kind of get the sense that Meta has the most control over their
Yeah,
AI
yeah.
destiny, and
Hmm.
it just feels to me that like the more you buy into like the extreme AI takeoff scenarios, the easier it somehow feels to be bullish on Meta because like so like you can think of a platform that can infinitely fine tune the way it sucks in more and more of your attention. It's really quite dystopian, but also, at the same time, AI is boosting engagement and conversion. It's maybe also allowing firms to spend less on labor. And so they then recycle that incremental margin back into customer acquisition. Or you might imagine like a super intelligent personal assistant that runs in the background in all aspects of your life, anticipating your needs and freeing up more time for leisure. And you use that to, to like, watch more reels or whatever. And yeah, I mean, the use cases in terms of like are necessarily vague.
Mm.
Not deliberately vague, but just vague in the sense that we haven't developed all the protocols for the robots to talk each other or whatever. But if we do arrive at that future, you want to be like a key center of gravity for when that stuff is like figured out, I guess is what I'd say. Yeah.
So, one of the things I kind of, joke around is, uh, so when kind of the AI stuff starts to like taking shape, like what it's going to about and all that, like it's pretty obvious, right? How this is beneficial for some a company like Meta, and it was almost like too unabashedly positive that I feel like Zuckerberg probably doesn't want to be too comfortable. So he wants to kind of up the ante and make it a bit of a risky bet, you know. So like now it's like, oh my God, they're spending $100 billion. Are they going to get acceptable return? Now we are discussing this question. Like if it was like, we're going to hit 50 billion, we'll see how it goes. I will take it slow. And I think we will be still like, yeah, like, Meta is a huge beneficiary. Like, even
Yeah.
if you are, let's say, creating videos through ChatGPT model, you are going to post it on Facebook or like Instagram or like, threads, right? And they'll be just fine, right? So, but again, like I feel like, I mean, there are long-term risks if you do that, but they're like super long-term, like in, let's say, 5+ years, if not longer. But as a founder, I think, you always feel a little itchy about the very long term, right? Not just five, like more than that, 10+ years, and you want to stay ahead of the curve. So yeah, like, and I feel like I joke about Elon Musk as well. Like, 10 years from now, sometimes I get confused. What will be Elon Musk's wealth? I think not actually 10, actually five. Uh, I kind of oscillate between it could be zero to like $1 trillion. So I feel like, uh, Zuckerberg is also like not like 0 to trillion, but like these people are risk takers. They are where they are because they took abundant risks. Like obviously calculated risk, and they turned out well. So I think they always are in a kind of risk taking mode and not necessarily sort of like managerial mode of like, just managing things as they are now, instead of taking like 1 ton risks.
Yeah. And I think that's what you want to see. Like, I think if you're a tech company and you're in this, and there's this fast moving current
Yeah.
like AI, you need to be like on the edge of chaos a little bit, right? It can't just be the most obvious applications today where it's just, if you're Meta improving engagement and conversions and
Yeah.
the quality of conversions, right? That's kind of the obvious stuff. And that should be most of the attention for sure at this point. But there
Uh-huh.
needs to be a little thing around like the edge that's like, super intelligence, powered, like, personal assistant and
Yeah.
meta glasses. There needs to be some of that.
Yeah.
Okay. Was there one more that?
Yeah. Go ahead and read it.
So this is from Colin. Here's my question: what part of the investment research process do you feel is underappreciated by others, or do others underallocate time to?
I'm going to mention something that people keep saying, but I suspect most people don't really, walk their talk. So if you just ask around, like a lot of, any professional investor, I think most people will just parrot that, oh, we look at valuation, we're valuation sensitive, but like valuation is the last step of the process, our research process, right? Everyone says that, but I don't believe it. I personally don't think that's what's happening under the hood, in most funds, in most like shops, right? Uh, and frankly speaking, I'm not saying this is a deliberate, they are deliberately misleading people, right? Uh, it's actually very hard to not know the valuation multiples, right?
Yeah.
So let's say I haven't studied, NVIDIA yet. But I do know Nvidia is trading probably at like mid-30s multiples next year earnings or whatever, something like, yeah, right? So I am aware, right? And I wish I weren't. And why is that? I do think the most important, if you're trying to do long-term investing, right? The most important thing is quality of the business, right? Yes, you may really appreciate the quality of the business and you can get stuck by the valuation multiples. It's totally fine. Usually, in my experience, the market has been volatile enough that you get your opportunities. Like it has never been the case to me that, oh, I truly appreciate a business's quality, but for some reason they never come to my valuation, right?
Right.
They usually do, right? Maybe I have other opportunities to allocate capital to, or maybe I just don't appreciate the quality enough, right? So those things can happen. But that's my thing. Like if you are researching a company, and I say this to myself as well. I'm not counting me out. I also say, yeah, valuation is like, is a part of the process, but it's not the core part of the process. But I also deal with this kind of dichotomy that I am actually aware of the valuation multiples in many
Right.
cases, especially when it comes to like more like well-known companies, right? That people keep talking about. Like I know NVIDIA's multiples, even though I haven't studied the company in a deep level. So, right. So uh, when it comes to investing, I feel like this is how I feel. Like, you can get to almost at the asymptote of knowledge. What you need to know, like, basics about investing, right? Uh, Actually, in pretty short time, it doesn't take like 30 years to get there. It's the like, what does Buffett say? Investing is simple but not easy. So all these ideas, what do you do for this? What do you do? How do you research? How do you like analyze a company? These are like simple, it's simple, right? Uh, you know, but it's not easy. We all know what we're supposed to. It's like having a balanced diet. We all know it. Like who doesn't, right? But most people don't follow balanced diet, right? So that's pretty much what it is for investing as well.
Yeah, good answer. So I think that's a good place to end it,
Yeah.
and then we'll probably get to more questions next month.